Why is America considered the best place to invest in the next year? The poll doesn't say that. That's why we asked our next guest to join us back on the Inside Track. He is the Chief Investment Officer at Wells Capital Management, helping to oversee $33 billion in assets. And he, too, is a bull on America. Jim Paulsen joins us from Minneapolis this morning. Jim, it's very good to see you. So, as I say, you've been bullish on America. Help us understand, in your opinion, what it is that investors are waking up to, the things that you've seen for a little while already.
Well, I think there's kind of two catalysts here for the stock market, Eric, looking forward right now. One is Europe. I mean, I don't think we're going to solve Europe anytime soon. I think personally it's going to be with us, that problem's going to be with us for years. But I think we are in the process finally getting more aggressive, the leaders are there, towards this issue. And I think we're going to move that particular problem from one that's been considered an imminent calamity to one that's probably going to be considered a chronic problem. And moving it, just doing that could mean a lot for the stock market. I think we've got a big discount in the valuation of the stock market today on the idea that Europe could blow up at any moment and bring down the global recovery. If we decide that's not going to happen, but it's just going to be an ongoing problem, then I think we could get a nice boost in valuations. We're trading, what, at 12.5 times earnings right now. Would we be trading at 13.5 or 14, for example, if we just decided that Europe was not going to blow up anytime soon? The second thing, I think, is a couple months ago, most investors were worried that the U.S. was on the edge of a recession, and we were trading down in the S&P 500 around 1,100. I think we've rallied up to 1,250 area here on the idea that we're not going to have a recession. But most still think the growth rate in the next year is around 2%, sort of slog along. I think we're going to find out that not only has the U.S. avoided a recession, but we're actually accelerating in its growth rate, and maybe we'll grow closer to 3% in the coming year.
Jim?
That, again, could be yet another catalyst to move the market higher.
Jim, can I ask, where in the equity market should investors be? If we look at this year, this wasn't actually a year for stock pickers because it was either risk on or risk off. Stocks were moving in one direction or the other. In 2012, what do you think it will look like?
Well, I think it's still going to be risk on, risk off a little bit, Stephanie. I mean, I think we're going to see when equity markets rally, you're going to see more of the cyclical sectors, and when they pull off, you're going to see more of the defensive sectors outperforming. But I guess my favorite in the coming year isn't even here in the United States, despite the poll. I like the emerging markets better than anything right now. They have had a very bad year and a half. As the policy officials there, starting in mid-2010, started to tighten in order to moderate the recoveries. And that tightening by the policy officials has really caused those stocks to underperform. Nobody likes them right now. They're down in price, so their valuations have improved. And the kicker is now most of these emerging market policy officials are turning to easing policies, which I think is going to cause these stocks to start to lead again and maybe have those economies pick up at mid-year.
Jim, you think that's going to happen soon? Because I know you've liked emerging markets for a little while. You recommended them back in August. Emerging markets, as I think you kind of alluded there, have underperformed the S&P 500 by almost 10% since then. How soon is this coming? Because people are waiting for that turn to happen.
Well, I think it's starting to happen. If you look at the relative price of emerging markets relative to the domestic market, Eric, it's kind of held its own now since the lows of August, September period, starting to form some bottom. It certainly hasn't started to outperform yet, but I think it will. I like the fact that we're getting more and more emerging market policy officials easing. China just did another easing move here last week, and we're seeing that in other markets as well. It's kind of like don't fight the Fed, the old adage we use here. If the Fed is easing, you don't want to fight against that. I think what we got is don't fight the Fed in the emerging markets now. The economies may continue to slow until like the middle of next year, but the stock markets may pick up before then.
Jim, it's good to see you here on the Inside Track. Thank you for joining us. Jim Paulsen, Chief Investment Strategist at Wells Capital Management, saying, yes, investors may like America. Emerging markets, in his opinion, are a better bet next year.